questions. So, Rushanara.
Yep, even more. So, just, Chair, if I may, I have a question on mortgages. In March, Nikhil, you told us that there were 32 institutions that had not treated borrowers in financial difficulty fairly. Have the recent interventions and your interventions with those lenders been effective in improving their behaviour? And could you give us a number of whether there are, whether that's number now as compared to March?
So we secured 47 million of redress from those institutions. If we see further harm occurring, we will intervene, but we're not seeing it on the scale that I described at the committee last time.
And how many would you say? You kindly gave a number last time, 32. Has it gone down, and how many has it gone down to?
Well, that was the group of firms that we took action against. So
Sorry, say that again?
That was the group of firms we took action against. Okay. So I'm not in a position to give you an updated number.
Sure. Have there been any new ones since then?
I'll have to come back to you specifically on that. But you should be assured we have a dedicated team supporting our work on borrowers in financial difficulty. So we're on this very diligently.
Thank you. And on mortgage prisoners, would you be able to write to me to tell me what the circumstances are now? I mean, there had been some improvements with the changes from absolute to relative definitions for affordability tests, but there are obviously thousands of people who will be even further potentially badly affected given the recent interest rates rises. Is that something you could write to us with an update, please? Turning to insurance, you talked earlier about, I have a broader question about insurance, which is obviously the Edinburgh reforms and the Chancellor's statement, and you correctly raised the question, and I think it's one for the new chairman, relatively new chairman as well, Mr. Ashley Elder, which is about the risk appetite. In evidence that we've had in the past from the Bank of England governor, as well as, I believe, John Vickers in one of the sessions, I'll stand corrected if clerks want to check that, there were some concerns about what the impact could be around reforms on insurance policyholders and the potential impact of that, which the the compensation scheme would have to take up. They did raise certain concerns depending on how these reforms are done. Is the Chancellor getting the balance right? You mentioned risk appetite. What are your views on whether we're heading towards the right balance in terms of these reforms in the interest of trying to get more investment from pension funds and so on?
Well, I think the sorry. Did you want to?
Sure. Please.
I think the topic is incredibly important because I think it is. I think I mentioned earlier. I think it's the specifics of competitiveness as opposed to abstract metrics, basically. I think certainly it involves taking a view on market risk and allocation across asset classes in the context of market risk. The point I think I've made to everybody I talked about this subject is that it is perfectly valid to talk around regulatory and other levers in order to encourage more risk-taking in markets. And that extends, aspects of what we've been doing recently since we last met, long-term asset funds. We made a decision not long ago that they could be extended to a degree with certain protections to retail and also outside the default option within DC schemes. And that's an explicit decision around risk. But the point I really want to make is that there's a big distinction between market risk and the way we approach that and the way that interacts with competitiveness in UK investment and conduct risk. Where, I think Nikhil mentioned earlier on, in that context, our gate is much, much, much tougher, and it should be, because the consequence of that is are fewer failures and fewer claims on the compensation system, and then ultimately a lower levy requirement. So the way I see it is that there is a valid discussion to have, and a very important one around market risk, but nevertheless, when it comes to our operations around conduct risk, they need to be appropriately tough. So in other words, this whole topic...
Chancellor, is the Chancellor muddying the waters then? Could they be, are they likely to remain appropriately tough? Because, the Governor of the Bank of England raised this point, as did the other witnesses about this. Where things don't go according to plan, there is a there's a risk that then you're running into impacts on certain groups, and that they referred specifically to the financial services compensation scheme.
Yep. Yeah, but I think coming back to in my relatively early interactions with industry, I did get a sense that there was a degree of conflation between the whole question of productive finance and risk in the system.
Yep.
And does this mean a return to light touch? Mm-hmm. And some in the rooms that I was in were sort of in favour of that across the board. In other words, a sort of deregulatory agenda.
What do you think of that?
I was very, very clear. I said it's, as I think I've tried to make clear here today. There is a valid conversation and debate to be had around market risk, freeing up savings in order to invest in UK PLC, basically. But that does not mean a return to light touch. There's no doubt about that whatsoever.
I think essentially what we're looking for is reassurance that and clarity that these reforms are not going to end up with the consumer or the public in some way ending up losing out, and it's not clear yet where we're going to land.
Let me go down. One difficult conversation, and I alluded to this earlier on, and Nikhil's alluded to it as well, is that if you accept that consumer or investors, retail investors, have access to higher risk investments, so say illiquids within LTAF, the debate is effectively to what degree should a compensation system cover that if there are investment losses or other issues. And I think that's a genuine debate to be had. We have a compensation mechanism in the UK that is quite extensive, with a high levy. I've been lobbied around the levy.
Specifically in relation to pensions and Edinburgh reforms, is there anything else you want to add about the kind of proposals and the reforms that are coming, or is that something we should revisit perhaps further down the line? Because some concerns have been raised about where, what the impacts could be if the balance is not struck correctly.
There are different debates here. There's the question around returns, and a lot of data being circulated suggesting returns in the UK for pensioners are systematically lower than in other pension systems. And some of that might be about investment risk. Some of it might be about structure. And so we touched on this last time. The disparate nature, 5,000 DB pension funds, many, many tens of thousands DC pension funds, doesn't enable the scale to go after returns that you might see in other markets. So I think we would be supportive of the direction of travel there, and appropriate qualifications for trustees.
Going on to other questions about insurance. In July, you announced you had uncovered examples of lengthy complaints handling times and people not given appropriate settlements and instances of motor insurance customers being offered a price lower than their car's fair market value after it had been written off, which is against FCA rules. Which firms were doing this? And this has certainly affected many of our constituents. We get complaints all the time about these sorts of cases.
I know there is a keenness from the committee for us to name firms which we are engaging in through supervisory and potentially other actions. We will, if we take enforcement action against a firm, we will name them at that point. You'll name them
so that consumers can see those. That's great. You'll be aware that we've had some evidence sessions around insurance, more generally, buildings insurance. I know there's action now coming down the line around ridiculous profits, commissions that are being taken in relation to freeholders and leaseholders then bearing the costs. There are also very high premiums in areas with, depending on crime data, for instance. So if you look at my end of London, East London, the premiums tend to be higher. There's also other issues around people who are not being insured or insured at very high premiums. There's with disabilities, there's with pre-existing health conditions, there's who are older. These are groups that are going to not be able to get affordable insurance given the current cost of living crisis as well. Are these areas ripe for reform at a policy level, or do you think the powers you've got are sufficient in enabling these sorts of groups to get a better deal? Because it seems people are being penalised because of where they live as well as the other characteristics.
I would say it's a mix. I think insurance is an area where there has been a need for policy level intervention as well as regulatory action. So we've intervened on loyalty penalty, pricing. I cited an area earlier that's been raised with us around treatment of minority ethnic groups in certain areas. Where insurers are pricing based on objective risk, they're allowed to do so. So crime rates in a particular area is a relevant factor when you're deciding on car insurance.
But with residential property, it's done as well. It's happening in terms of where you live. So if you are, and the social indicators tend to follow as well. So the poorer you are, and so on, you'll be living in areas with higher crime rates, which then has a knock-on effect in terms of the cost of insurance.
Yeah, which is why I say I think this is probably going to require a mix of policy and regulatory intervention. So you've seen, for example, policy interventions on flood insurance because of some specific issues there, which then on the.
Could you do something similar in relation to these sorts of pooling risks around? Because at the moment, if you've got a pre-existing condition or a disability, or you're much older, it's prohibitively expensive getting travel insurance, for instance.
The ABI is looking at that in the area of leasehold, as you heard from my colleagues last week. So those risk pooling type mechanisms would typically be mechanisms that the government would need to instigate. And obviously we would input into, if we saw harms like that accruing, we would input into that consideration. I think this is going to be a bigger issue for us in the coming years, because data and artificial intelligence is enabling firms to price risk even more accurately. And there is this question of what happens to those.
Have you got any examples of ethnic profiling by insurance companies?
It's an issue we're looking at. I'm not aware that we have identified any egregious examples at this point in time.
Okay. Just one final question, which is linked to evidence we've had for a session on insurance and third-party loss adjusters and linked institutions that insurance companies appoint, and they similarly run down the clock in terms of delays and not responding to claimants for months. The FOS takes a very long time to respond. Maybe Nigel Farage will get a quicker response than everybody else because the minister's got involved, but for ordinary people that's not the case. And they can be in very difficult circumstances. We've had evidence from somebody who had a fire in their house and it's still ongoing, and the FCA's got a complaint about it, FOS has, and so on. Are you looking at this? FOS has said to us in written evidence that they are concerned the largest numbers of complaints are coming in terms of loss adjusters and delays. So is this something that the FOS has to deal with?
No, it's something we're looking at as well. But of course, we take into account the data we get from the Financial Ombudsman Service about complaints and uphold rates there. We have contacted major insurers to look at their settlement times, look at their claims handling processes, and where we see outlier behaviour, we will act.
So what about smaller and medium-sized insurance companies? Because we think that some of the bad practices coming from those, actually. Are you talking to them?
We've looked at a sample of insurers. I'll have to check what the sort of the size of that. But if you have specific concerns about a firm, feel free to share that with me confidentially.
Would you be able to write to us with more information as you make progress on that?
Yeah.
Thank you.
Very much, Rushanara. Anne-Marie.
Thank you. I'll be